Hello guys, welcome to another video. In this video I'll do a practical explanation of 20 terminologies, 20 forex terminologies. Before that, if you're yet to subscribe to my channel, kindly do by hitting the subscribe button below. Also turn on the notification bell beside it to get notified anytime I upload a new video. First, let me explain what forex terminologies means. Forex terminologies are those frequent words that they normally use in forex. So words like broker, asset, trend, price action, CFD, currency pairs. So all those things, about 20 of them, I'm going to explain it. So as I'll be explaining it, I'll be demonstrating it on this IQ option trading platform. So number one is broker. Who is a broker? A broker is a company or a firm that provides traders the platform where they execute their trades. For example, is the platform you're looking at. The platform you're looking at belongs to IQ option. These are their platform looks. So an example of a broker is IQ option, and there are so many brokers out there. So if they say broker, I believe you should be able to understand what broker means. Number two is asset. What is asset? In financial trading, the term asset relates to what is being traded on the market, such as currency, stock, etc. For example, an asset can be, if you click here now, the add button, you see different assets. You see different assets. You see these assets. These are different assets. These are currency pairs. All these are currency pairs. So these are assets. So that is an example of an asset. So it can be a currency pair, it can be a stock, it can be a cryptocurrency. As you can see here, you can see Zcash here. So all those things, these ones, Euro, Japanese. So all those ones are called assets. Number three, trend. A trend is a tendency for price to move in a particular direction over a period of time. What is trend? If you look at these charts, you see this movement you're seeing. These are trend. Price movement. These are price movement, and it's called what? Trend. Let me zoom it out. Okay, so all this is how it goes. All this price movement is called what? Trend. It's trending. The asset is what? Trending. It can be upward trend or it can be downward trend. So that is what trend means. Then number four is price action. What is price action? Price action is just the action of price. It describes the way a market moves, including its trend and key support and resistance level. You understand? So price action is just the way, the pattern, the trend made, the price made, the pattern the price made. You can call it price action. It's called what? Price action. So price action, if you say you're a price action trader, a price action trader doesn't normally use indicators. There's use the past movement of this. They use the trend, the price movement of an asset to predict the future price of that particular asset. So that is what price action is. Next one is the price chart. What is price chart? Price chart is just this chart, the whole of this chart you're looking at. The whole of this chart you're looking at. The whole of this chart you're looking at is called what? The price chart. So that is price chart for you. Then number six, what is forex? Forex simply means foreign exchange. What is traded there is always currency pairs, foreign exchange. So it has to do with trading different currencies. Then number seven is CFD. What is CFD? CFD simply means contract for difference. This offers traders an opportunity to profit from price movement without owning the underlying asset. What do I mean? Let me give an example. For example, if you want to buy Apple stock, if you open a buy position on Apple stock, that does not really mean that you own the asset. Rather, you're hoping to profit from the price difference. So number 8 is currency pair. What is currency pair? currency pair is, for example, let's open up here. So if you, as you can see, all these are what currency pairs. This is Euro Japanese, this is Pound Japanese, this is New Zealand USD, this is USD Japanese. So these are what currency pairs. In currency pair, they have the base currency and the quote currency. The base currency is the first one here, while the quote currency is the second one here. For this Euro Japanese, the base currency is the euro, while the quote currency is what? The JPY, Japanese yen. And the next one is call and put. Call/put, or you can call it long/short. What do I mean by call and put? When they say, okay, when call means buy or long, call position, buy position, long position, all this means the same thing. So if I click the buy, if I click this buy button, that means it's either I can say I have opened a buy position, or I've opened a long position, or I've opened a call position. And if I click this sell button here, it simply means it's either I can say I opened a put position, or I opened a short position, or I opened a sell position. These are the same thing. So you should be able to understand when someone say, okay, I opened a call position, or I opened a long position, or I opened a put position. So you should be able to differentiate and understand it. Then the next one, number 10, is leverage. What is leverage? Leverage involves borrowing a certain amount of money from the broker to invest in a trade. If you look at this point, you see leverage. So every asset in the forex market has a leverage, and if you click on it, you see something like this. This is X50. Some asset you can see up to X100, or X1000, or X500. So let me explain how leverage works. Assuming your investment is $1 and you use a leverage of 1,000, that simply means that the broker is borrowing you 1,000 times of your $1, which makes $1,000. This simply means this price movement. As you can see, this is the price movement as it's moving up and down. So if you move towards the direction you speculated, any slight change will amount to a huge profit compared to someone using the same $1 investment with a leverage of 50. But if the trend happens to move against you, you can also incur a huge within little price movement. The next one is ask/bid price. Ask and bid price. What is ask and bid price? Let me zoom this chart. If you look at this chart, you notice something. This is the current price of this asset, and this is the ask price. As you can see ask here, and this is the bid price. You can see bid here. So bid price is the price. This bid price is the price the broker is willing to sell this asset to you. So if you open a buy position, instead of your trade to pick at this current point, it will rather pick at this point. And if you open a sell position, instead of your trade to pick at the current price of this asset, it will pick at the bid price. is only when this trend, the price movement, fall below the bid price, you start making profit. If it's a buy position, if the trend move above the ask price, that is when you start making profit. The next one is spread. What is spread? Spread simply means the difference between this ask price and the bid price is what is called spread. Is what is called spread. So if you're a day trader or a scalper, it is best you go for asset that has low spread. Low spread, because if you take an asset that has high spread, it will take longer time for your trade to run into profits. So that is spread for you. Then the next one is equity. What is equity? Equity, this is the current value of your trading account. This is the current value of your trading account. If you look at this is my trade, the amount, the total amount in my account, in my Forex account, is what? My equity. So that is it. Now you understand what equity is the total amount in your Forex account. The next one is PIP. PIP means percentage in profit. It is a measure for the exchange rate movement. A PIP is equivalent to 0.001. 0.0001. So what is PIP here? If you look at this point here, you see some numbers here, some numbers here, some numbers here. These are the price of the assets, and this is the current rate. So when this current rate, this is 0, you notice that this current rate is not steady, it's changing with time. The exchange rate movement is called PIP. So the next one is exchange rate. What is exchange rate? This is the rate at which you exchange one currency for another. The exchange rate shows you how much of the quote currency you need if you want to buy 1 unit of base currency. So let me open the Euro Japanese. This number you see fluctuating here is called the exchange rate. Exchange rate here, that's the exchange rate. So at the it keeps changing. So the difference in the exchange rate is called PIP, as I explained earlier. So this is what exchange rate is. So if you want to check the exchange rate of Euro USD, you just come here and look at it. This is the number that shows the exchange rate. That's the current price of that asset. So that's the exchange. The next one is slippage. What is slippage? When you're trading, sometimes you will notice a slight difference between the price you expected and the execution price. When this happens, it is known as what? Slippage. It can happen to your advantage or disadvantage. Let me explain slippage. Assuming I want to open a buy position, and the buy position is supposed to peak at the ask price, and the ask price is this price here that is showing here. So once I open the buy position, instead of it to peak at this point, it will peak either lower or above this price, the price level, the ask price level. So that when that happens, it is called what? Slippage. It can happen to your advantage, it can also happen to your disadvantage. So that is slippage. Then the next one is position. What is position? This is a trade that you hold open during a certain period of time. You keep hearing when I say open buy position, open sell position, open call position, or long position, or short position. It simply means to open a trade, and to close the position is just to close a trade. So once I click this buy button, if I click this buy button, it simply means that I have opened a position. Do you understand? That's position. So if I close it, I've closed that position. So that is what it means. Then the next one is stop loss. What is stop loss? It is an order to close your trade as soon as it reaches a certain level of loss. Let me explain. Assuming I open a buy position. So assuming I open a buy position by clicking the buy button, then right here you see take profit, and down here you see stop loss. So if I want this my trade to automatically close when the price reaches, I can hold it, I can set it here. So as you can see, I've set the stop loss at this point. So this simply means if the trend is going against me, instead of me to lose much of my capital, this stop loss will help me. This stop loss here will help me close this trade automatically once the price of this asset reaches the point I set my stop loss. That is what stop loss means. It helps you to control loss. Then the next one is take profit, which is the last. The next one is take profit. What is take profit? This is an order that closes your trade as soon as it reaches a certain level of profit. Just like stop loss, if you want to set your take profit, assuming I've opened a buy position already. So if I want to set my take profit, I can set it to any level that I want, any price level that I want. So once if the trend is moving, if the trend reaches my stop loss, you automatically close the trade and secure my profit. So that is take profit. If this video was helpful, kindly click the like button. Also subscribe to the channel.